Hello everyone. In today's video we are going to discuss the issue of shares under the second unit, that is counting for companies, issue of shares and debenture. This is the chapter 1, that is issue of shares. What is company? Actually we know that company issues share. So first let we discuss what is company. It is an artificial person created by law having separate legal entity with a perpetual succession and a common seal. सो वी कैन से कंपनी जो है वो क्या है, एक आर्टिफिशियल पर्सन है जो कानून की नज़र में एग्जिस्ट करती है, कानून ने बनाया है. इसकी जो एंटिटी होती है वो ऑनर से अलग होती है और ये कभी नहीं ख़त्म होने वाली एक आर्टिफिशियल पर्सनालिटी है और इसकी अपनी एक कॉमन सील होती है. Characteristic of a company, first one is incorporation. The certificate of incorporation of a company is issued by the registrar of companies as per guidelines given in the Company Act 2013. The law considers a company as an artificial legal person. Second one is separate legal entity. A company has a separate legal entity from its owners, that is the shareholders. Next is perpetual existence. A company has perpetual existence, not affected by the death, lunacy or insolvency of its shareholders. It can be wind up only by the operation of law. Fourth one is common seal. Every company has its common seal which act as the official signature of the company. आपने देखा भी होगा, बैंक में जाते हैं, पैसे डिपॉजिट करते हैं तो आपको जो रिसीट मिलती है उस पर बैंक की स्टैंप लगी होती है, वो एक ऑफिशियल सील होती है, वो रिप्रेजेंट करती है कंपनी को. Fifth is transferability of shares. The shares of a public company are freely transferable. Next, limited liability. The liability of shareholder is limited to the unpaid value of his share. For example, if the face value of a share is in a company is rupees 10 and a shareholder has already paid rupees 8 per share, he can be called upon to pay not more than 2 rupees पर शेयर. यानी कि जितना उसने कैपिटल को सब्सक्राइब किया उससे ज़्यादा का हम उससे पैसा डिमांड नहीं कर सकते. सेवेंथ इज सेपरेशन ऑफ मैनेजमेंट फ्रॉम ऑनरशिप. शेयर होल्डर्स आर द ट्रू ऑनर ऑफ अ कंपनी, but usually the number of shareholders is quite large and as such it is neither possible nor desirable for each member to take part in day-to-day management of the company. Now, what are the major type of companies? There are two. One is private, another one is public. Now we are having one person company, but that is irrelevant. They are different. First one is on the basis of number of member. A private company must have at least 2 member and a maximum number is fixed up to 200. While a public company is to have minimum 7 members and there is no upper limit on the members. Second one is invitation to the public. A private company cannot invite the public to subscribe to its shares, while a public company is free to invite the public for to subscribe its shares. Third one is transfer of share. There is restriction on the transfer of shares when we talk about private company, but a public company has no restriction on the transfer of its shares. As we are talking about types of share, there are two types of shares. They are, first one is preference share. These shares which get preferential right in respect of, preference means priority, in respect of A, right of dividend and B, repayment of capital on winding up of the company. What they are? Right of dividend means those who are having preference share, they must get dividend before the equity holders get, and in case of winding up of the company, the preference share must be paid before the capital paid to the equity shares. And what is equity shares? The shares which are not preference shares are called equity shares and do not get preference in above respect. They are the real risk bearer. And the rest things we will be discussing in the next video. Thank you.